Hello, this is Mike Swanson. I run the website WallStreetWindow.com, and the odds are you're watching this video because you got an email from me telling you it's up. I send out an email every morning before the opening bell with the top headlines I'm watching during the day, a blog post from me too about charts, stocks, trades when it comes to the markets. And you got to get it. It's free. If you're not on it, click the link below this video and subscribe. And today, we're seeing a gold surge on the open. The price of gold is right at 1825, which really is the key breakout resistance point for the metal. It's been the high this month. After a June drop, gold went through a stabilization phase, much like it did in March, and it appears to be turning up and getting ready to break out in August. But one thing helping it go up are comments yesterday by the Federal Reserve Chairman Jerome Powell, and I will play them for you in a few minutes or moments, in which he redefined inflation. He said several months ago that, look, he knew this inflation was coming, and we got an annualized over 5% CPI print earlier this month, and he knew this could spook the markets. This could make interest rates go up on the yield, which would dump stocks, and he didn't want that to happen. So he said several months ago that inflation was the word transitory, and that word transitory became a mantra repeated everywhere in the financial media. And even hedge fund managers and ETF managers, such as Kathy Wood, repeated this over and over and over and over again as a reason for you to keep buying their funds. But what Powell was saying in transitory was he was expecting inflation would just go away within a few months. Now, what he did yesterday was change his definition of transitory from months to quarters or an undefined amount of time. And that's an extremely dovish shift in his rhetoric. It's a way to say he's going to ignore it and has no definitive way to tell you when he's going to stop ignoring it, because he's saying you'll have to see for yourself. But the important thing is the implications for what these statements have done. They helped cause a drop in the dollar yesterday, and today's morning move up in gold. It's 9:40 as I'm doing this video. We'll see what happens with gold, in the next couple hours and tomorrow. Will it be able to close above 1825? Because let me show you the chart and why 1825 is the key level. Look, I believe it's going to break it, if not today, if not tomorrow, next week. I own gold. I own mining stocks. I'm not trying to day trade, jump in and out. But I think it's going to be a lot of people are watching this level. So if we flip to my browser so you can see exactly what I'm looking at, here's the price of gold this morning, right under 1825. Let's see, update it at the second. What's it done in the past 4 minutes? Oh no, don't tell me this is happening right as I'm doing the video. There we go, 1826, up $19. So it's above that 1825. And this is why these levels are so important. Here's the chart of the price of gold. You can see the double bottom stabilization that took place in March. Gold had been declining really since the beginning of August in a, working off the huge run it had after the March crash, and rallied up into June. Then it pulled back, and since end of June has been trading around 1800 in a stabilization, much like March and April, and it will be an 1825 pivot. A close above that would be very similar to the 1775 close in April. That was the high in March. And people watch these charts. They look for buy patterns. So some people on the sidelines will see that and use that as a trading pattern to buy into, because they can buy and put a stop basically under 1800. And that's that I don't even know. Let me see what that would, if someone did that. Let's say you bought at 1830, and then you put a stop loss at 1800. That would be a 1.7% stop loss, very tight. And then you can hold, expecting a rally at least up to 1925, and you clear that, who knows where it's going. So high reward, low risk setup, right here. Now I own it already, so I'm not trading like that. But one way to do it is look at the IAU ETF, which I own. Just use 35 as a buy point if you want to make sure it's clearing resistance. But that can happen before the end of the day. The GDX ETF, which I also own, is clearing resistance as we speak. And that's the critical indicator right there, because the performance of the mining stocks tends to lead the performance of the metal. So the mining stocks are already clearing resistance. That's a good indication that gold itself is likely to do so. And you can make an indicator out of that. GDX divided by GLD, relative strength indicator. This, frankly, is my number one favorite indicator to use to time the trends of gold and mining stocks. So the indicator, the price pattern on this has turned up, much like it did in March. So in my view, we got a green light on gold, mining stocks, silver stocks too. Frankly, the way I see things right now, this is the best trading setup in the markets. If you want to take a trade or make a new buy, this is it. And the reason I say that is when we look at the S&P 500, it's up today, which is nice to see. But, you want to buy in pullbacks or consolidations, not when something's at an all-time high. The time to buy was months ago, if not last year. Frankly, most of the positions I now own are things I bought after the crash last year. It actually took some money off the table 2 weeks ago because I wanted to reduce my own risks. I do that at times. So, and that's my stance on the overall markets. It's not saying I'm calling for a crash or anything like that. But one interesting thing, I'm going to get my notepad. Where is it? Yeah. Oh, well. As I was talking about in my previous video, here it is. I was showing you the notepad, and I was talking about 5 stocks that I was watching this week to see if they would indicate what the stock market was going to do. These were leadership stocks, big cap technology stocks, all reporting earnings this week, because there's a consistent pattern in the markets where if you see declining relative strength, meaning leadership shifting into only a few stocks are dragging the indices up, where a lot of stocks start lagging or even declining, that's a sign you're in a tired rally, the makings of a potential top. But to confirm it, that it is topping, you need to see the leadership stocks peak and top out. And the earnings report this week was a potential time for that to happen. If the stocks had gapped up and just kept going up, and afterwards, the next day, and really into the end of the weekend, that would be a sign that this rally is really going to take off and pick up even more momentum, fueled by these stocks. But if these stocks gapped and dumped, that would be a sign that the market rally is over. So let's look and see what these stocks have done. Apple, it did fade rallies, but today it's up. I can't really draw any, hard conclusions from that. Microsoft, it did sell the earnings, but today it's ticking back up. Amazon, sort of the same story. Google sold earnings, and today is up a little. It's not really, you can't say it's dumping, you can't say it's surging. And that's the case for each of these stocks we looked at. Facebook, Now it did gap down today. You know, I wouldn't say it's crashing. One stock that is getting hit hard is PayPal. And that's a sixth stock on the list actually. But overall, you know, when you look at it, most of these stocks, like Amazon, this stock is not surging. It's also not dumping. So to me, you know, what's that? That looks like a stock likely to go sideways and drift. And that may be the case then for much of the stock market. So I'm really neutral, let's say, at the moment on the market. And that may be the case now for a while. But that said, I am still worried about lagging stocks, although the ARK ETF is up today. We've seen weakness in the Russell in the past 10 sessions, but it's floating. It looks like most of the market's due to float, but the thing that has the most potential upside, let's say from now to Labor Day, is definitely gold, because of what it's doing. It's breaking out basically as I'm speaking. Today is the day to buy gold. Today is the day to buy mining stocks. Just put stops under yesterday's low. One could buy GDX, put a stop, under 33. GDX is more volatile than gold itself. That's why you got to put wider stop loss orders on it. On gold, you're probably looking at like I said, a 1.7 to 2% stop loss order from the price trading at this moment. Again, I own GDX, I own IU, I own mining stocks. I own other stuff too. I own REITs, I own energy stocks. And by the way, REITs trading at a new high, right? REITs are outperforming ARK, outperforming the NASDAQ. REITs, gold though is less volatile than the NASDAQ and most FAD stocks. When gold pulls back, it does less than the stock market, or that's the way it's been for the past several years. So to me, it's a safe haven. But the big story is, for another video, is that as the yields are still have faded, and it's quite amazing. But that's another topic. I want to focus at the moment on Jerome Powell, and it's his words. It's a huge shift in monetary policy, because look, in June the talk was, this Jerome Powell, because he's saying transitory and inflation will, fade, and he's a little bit more hawkish, and that was what was said at the last meeting, and gold sold on that, and the idea was, he may even be raising interest rates next year, and he may be reducing the quantitative easing bond buying operations. All that thrown out of the window. Now the idea that he may taper, so that QE has been pushed out from what people were saying September to now maybe December, maybe January, and now he's completely taken away the idea that transitory inflation is defined by a few months. I heard on CNBC when I was watching this live, someone say he's changed the definition to a few quarters. Well, what does that mean? A year? And then I went and found a clip replaying his comments. So you watch this and you ask yourself, when is he defining the end of inflation? Because wow, it's really fantastical. This is like, he used to be such a plain speaking person, easy to understand. Now he is talking like Alan Greenspan used to do. And in fact, in my opinion, what he's saying is gibberish, and he has no definition now of when inflation will end, maybe even what inflation even is, which in my view means this is about the most dovish thing he could have possibly said. But you watch this clip, you try to figure out how he's defining transitory inflation now. Let me play this, and because it's pretty crazy.
Transitory is really this. It is that the increases will happen. We're not saying they will reverse. That's not what transitory means. It means that the increases in prices will happen. So there will be inflation, but that the process of inflation will stop. So that there won't be further. What we
pretty wild. And that's why gold, that's helping to fuel the rise this morning in gold. It's causing some to buy, no doubt. But it's always the chart pattern that's the key. You know, the change in the trends, that's the key thing. That's the real thing that's happening today. And why today's a significant day for gold. It's not so much only what he said, but the price pattern, you know, it's completing the stabilization after the June decline. That means we're now looking at a rally. And the start of the rally is the time to buy if you're not already in my opinion. But anyway, if this is the first time you've seen me on YouTube, what you want to do is click the subscribe button and then click the bell next to it. And then YouTube will send you a notification the next time I have got a video up. And you're going to want to get that. You're going to want to be on my email list. And if you have already done those things, then click like on the video so that I'll know that. And I'll be talking with you later.